Amazon, the retail and tech giant, just made a massive announcement. Amazon announced its first stock split since the dot-com boom, telling investors on Wednesday that they'll receive 20 shares for each share they currently own. The stock soared 6% in extended trading. The company also said the board authorized it to buy back up to $10 billion worth of shares. Stock splits are cosmetic and do not fundamentally change anything about the company, other than possibly making the shares accessible to a larger number of investors because of their cheaper price. If the split were to happen as of Wednesday's close, the cost of each share would go from $2,785 to $139, and each existing holder would get 19 additional shares for every one they own. Amazon is the latest, highly valued tech company to pull down the price of each share through a split. Google parent Alphabet announced a 20-to-1 stock split in February. Apple disclosed plans for a 4-to-1 stock split, and Tesla told investors it was instituting a 5-to-1 stock split. CEO Andy Jassy has faced a rough start to his tenure, which began in July. The stock was the worst performer amongst the big tech companies last year, and the stock has dropped 18% so far in 2022, joining a decline across the sectors. Amazon has just reported its slowest rate of growth for any quarter since 2001, and according to a recent Wall Street Journal report, billionaire activist investor Dan Loeb, who has been adding to his Amazon holding, told investors on a private call that he sees about $1 trillion in untapped value at the company. Amazon, which has recently made adjustments to its compensation strategy, said that the latest change is targeted to help corporate staffers. This split would give our employees more flexibility in how they manage their equity in Amazon and make the share price more accessible for people who are looking to invest in the company, an Amazon spokesman said in a statement. Last month, Amazon boosted its maximum base salary for corporate workers to $350,000, up from $160,000, as it contends with the increasingly competitive labor market. Historically, Amazon has relied on generous stock awards to attract talent, but the shares underperformed in 2021, and employees have pressured the company to make changes. Distributions from the stock split will be made to Amazon shareholders at the close of the business on June the 3rd, and trading will begin on a stock split adjusted basis on June the 6th. This is Amazon's fourth stock split since its IPO in 1997, and its first since 1999. When the company was a fraction of its current size. It also split on a 2-to-1 basis on June the 2nd, 1998, a 3-to-1 basis on January the 5th, 1999, and a 2-for-1 basis on September the 2nd, 1999. Amazon shares are up over 4,300% since the last split was announced. Again, Amazon's share split is similar to the one announced by Google's parent, Alphabet, last month. Several mega-cap companies such as Apple, Tesla, and Nvidia have split their stock since 2020. Currently, the stock has traded nearly 9% down over the past year and 18% down year to date, but the overall market and all tech stocks have been hit hard since the beginning of 2020. Overall, I think this will be good for Amazon stock, as it will allow more investors to purchase in due to the lower cost per share. And the $10 billion buyback pledge investors should be very happy with. This news and the direction Amazon is trying to head towards. Overall, this was just a quick summary video on how it's going at Amazon and how this 20-to-1 stock split and $10 billion buyback will affect its stock and investors. Leave your thoughts on this in the comments, and if you're an Amazon investor and maybe thinking of buying into Amazon, leave a like if you enjoyed. Tune in every week for more business and finance related content.